Bring in Peter Spiegel, U.S. Managing Editor at the Financial Times. Peter, great to see you. Thanks for joining us.
Thanks, Will.
So the takeaway of this is, even if the president likes to talk about the stock market a lot, it's kind of irrelevant in terms of winning votes.
Well, that is the risk. I mean, he's made his argument for re-election around the economy and the markets. And if American people don't seem to know that the market's gone up, and we also said, we asked this question, do you think the stock market's performance directly affects your personal finances? And again, 2/3 said no. So if he's out there tweeting and arguing that the S&P 500 at record highs is an argument for his reelection, the American people don't feel that, suddenly there's a challenge for him. And I guess the question that we're trying to figure out is, do the economic indicators, do the market indicators actually drive voter behavior this time? Or is it because it's Trump, it's something else?
And then not even does that not help Trump, but perhaps it could help the Democrats talking about this wealth divide and sort of pointing out you don't feel it because you're not part of this top 1%.
It's interesting. And we broke down, we sort of oversampled some of the swing states. And what you saw is that people in sort of, the less wealthy states, and particularly those of less higher incomes, are the ones that are the grumpiest about this. So, yes, I think that is why you see Elizabeth Warren and Bernie Sanders really hitting that home on that, is that what we saw 4 years ago, which is sort of this general anger at the state of the economy, still exists 4 years later. Just that's what Trump capitalized on 4 years ago. Can he capitalize it on again if people don't feel it's improved? And I think that's something we're trying to find out when we do this on a monthly basis.
Although you can also bet that the president's going to be out there saying 3.5% unemployment, which fits in with generally high consumer confidence. So, yeah, there's still an undercurrent of unease, I guess. But beyond the stock market, there's things to brag
absolutely.
about.
But we've asked this question: are you better off than you were 4 years ago? And 2/3 of Americans say either they're the same or worse off. So again, we've done this now 2 months in a row. It's again, show the same results. 2/3 of Americans say they are not better off. And again, so even the broader economy, when you have low unemployment, you have obviously growth at 2-3%. I mean, everything from all the big indicators things are doing well. People are still grumpy out there. They're not feeling it. Maybe it's because of wage stagnation, although we've seen growth in the last 12, 18 months. Maybe it's because of healthcare costs that are still rising. There just doesn't seem to be a general excitement about the state of the economy right now.
Going back.